for you this evening on What's Brewing Today. Full-stack pet care startup Supertails has raised 125 crore rupees in a Series B funding round led by RPSG Capital Ventures and existing investors Fireside Ventures, Sama Capital, DSG Consumer Partners and others. Now, this funding will be deployed towards enabling business growth and expanding its business. The startup has raised a total of $27.5 million since its inception in June of 2021. Joining us now to discuss this further is Aman Tekriwal, the co-founder of Supertails. Aman, thank you so much for joining us on Startup Street. Now, you're a tech-enabled pet care startup which focuses on pet supplies, healthcare and training. So basically, you're looking to cater to all of a pet parent's needs. So talk to us about your growth so far and which of these verticals is currently doing the best for you. Also, if you could sort of give us your average customer spend on the platform.
Sure. First of all, thanks a lot for having me here. Our journey started in 2021. And we started with an e-commerce platform where, first of all, we understood the customer problem, that what are the primary needs which a pet parent have, and we figured it out that the primary needs which the pet parents have is the nutrition, food, and healthcare, and that's where we started to address this problem by establishing an e-commerce platform. Where first of all, we solved for the supplies. Then later on, we added teleconsultation, where we have done so far more than 70,000 consultations. Later on, we added, our own, in-house food brand, which is Hello. And very recently, we have launched a pharmacy for our pet parents.
Right.
Today, we have a close to annualized run rate of 120 crores in terms of revenue.
Right, absolutely. So you've just recently raised $15 million. You just raised $15 million today. So business growth, acquisition of new consumers, all of that's on top of the agenda. So talk to us about your fund allocation plan. Sure.
So if you look that we all founders, we are always in the dilemma that for which stakeholder should we create the value, right? And this is the dilemma which all the founders probably live with, whether we should create value for our customers, employees, communities, environment, or the investors, right? And the biggest problem in this that you cannot create value for all at once. And if you are trying to actually create value equally for everyone, it is very, very difficult. And to answer this and to solve for that key, what is the biggest purpose? We thought, and we brainstormed internally, and we thought that the biggest purpose we today have is to solve for generating love from our customers. And this fundraise and the allocation of this fund will be primarily deployed to solve for a customer experience, whether it is in terms of deploying newer technologies. We'll be foraying into offline business models as well, where we'll be primarily solving for the services like healthcare.
Absolutely. In fact, you recently added the Supertails pharmacy, right, versus your other offerings. How has this fared? If you could quickly tell us any other new services coming up.
So we are also going to launch insurance. We are going to launch our private label in the non-food space, which will be in the name of brand Skaters. We are going to launch our private label brand in cat litter, which is going to be called Scoopy. And at the same time, we continue to scale, the experience which we provide to our customers by hand-holding them through a lot of information and education.
Absolutely. And you hope to clock 500 crore rupees in ARR in 2 years. And you said you're currently doing 120 crore rupees, right? So in FY22, your losses had surged about 2.6 times. So what's the road to profitability looking like?
So, we have been making steady progress on the profitability side. We are, CM2 positive, contribution margin 2 positive, which means that post-marketing we are able to, generate profit. We are very confident by, through our, services revenue, which is growing at a healthy rate, as well as by increasing the contribution of our private labels, we'll be able to, expand our gross margins. And in the next 2 to 3 years, we would want to be EBITDA profitable company.
Okay, in the next 2 to 3 years, EBITDA profitability. And what's the current, revenue mix between the verticals, between your food business, between your pharmacy, all of that? So what's the revenue mix, if you could quickly tell us?
Sure. Our food business, contributes roughly around 70% of the, total revenue, and the rest 30% comes from the non-food, out of which 10% is, from the services, which includes pharmacy.
All right. And as you mentioned, you also plan to use the funds to foray into your offline business strategy, right? So what's the current offline presence, and how big are you going to go with physical stores in the future?
So today we don't have any offline presence.
Correct.
We would first of all open 4 or 5 outlets over the next 2 3 quarters. We'll try to figure out the model which serves best to our customers as well as the unit economics. And once we are able to figure out the model, we'll scale to around 25 to 30 outlets over the next 2 years.
Okay, 25 to 30 outlets over the next 2 to 3 years. All right, Aman, thank you so much for joining us on the show today, and we wish you all the best with these business growth plans of yours.
Thank you so much.